Hello everyone, hope you're well, and today we're going to be examining chart patterns. These are patterns that price action makes that signals the market entries and exits. So why do these patterns work? Actually, why does any pattern, candle, or indicator work? It's because other traders use them, guys. We've only learned candles, so why does a dragonfly doji or a hammer candle signal the market to the upside? Because it's a self-fulfilling prophecy, guys. This is what TA is all about. It's not a science. Yes, there's some mathematics involved, but ultimately what makes TA effective is that other traders use it. All right, let's get started. Now, before we proceed into chart patterns, I want to touch base on market structure just very briefly because it's very important yet very neglected. Once you see a chart like this is Bitcoin's daily chart, the first thing that should come to your mind is spotting higher lows and higher highs. All right, so clearly you can see here a lower low was formed, right? Then here you can clearly see that lower high was formed, so LH. Then you can clearly see again you had another lower low, and then you had another lower high, another lower low, and another lower high. And now you're looking at a possible lower low here, or this right here was already a higher low. And these levels are very important because that's when you have some sort of confirmation that you're ending a trend. This is obviously in a very big downtrend, right? And the first confirmation is making a higher low on the market, and full confirmation is when you make a higher high. So say that from here we touch here and then we go up, right? Then you can establish here a higher low, all right? But then if this stays here and comes back down again, then this here is invalidated, and you can see we made another lower high, and then you have a lower low somewhere here. Now say that didn't happen and we made a lower high, we came back down to test it, and then we proceeded until here. Then if you come back and test it, then you have confirmation that we're out of this downtrend, because now you have a higher high on the grand scheme of things. And you can see we've been trying to establish a higher high forever now. We tried making a higher high over here, we failed. We tried making over here, we failed. And again here, we failed. So the bull rally will likely begin when we see an established higher high. That is called confirmation that we're out of this bear market, because it is very, very unlikely that you have a higher high somewhere around these levels past 10,000, somewhere here, a clear higher high with a breakdown here and a retest somewhere along these lines, and then have this collapse. It could happen, but this is a low probability movement. So the first pattern we're going to be looking at is a bull flag, one of the most common patterns of continuation of a bullish momentum. We're going to examine it over here. Here is April 13th, April 12th, and a lot of people remember this day because out of nowhere, when all hope was lost, Bitcoin did a 20% candle on one day. After this, we started painting what we call a bull flag. So what is this? I'm going to be drawing the pattern right here, and this is what's called, let me make this more visible. This is what's called the pull of the flag. So you have the pull right here, and then you have the flag. All right. So recall that when we did support and resistance, we did say that support and resistance can be found in patterns and in trends. So here you have a pattern that is playing out and is holding as resistance. So you can see here that this held as support here and resistance there. The price couldn't get past this line until here, and it couldn't get below this line during the entirety of the bull flag. All right, so now that you have a bull flag, this doesn't end here, right? The bull flag gives you continuation to the upside. However, if the price were to drop below this line and close a daily candle below the flag, this pattern is invalidated. However, that never happened. As a matter of fact, it broke out of it. So the way you calculate the bull flag target is once it breaks out, what you do is you take your pole, all right, the pole of the flag, and you extend it from the bottom of the bull flag itself, and there's your target. And look at that, it played out perfectly, all right? So this would be the target for a bull flag. Now, had the price dropped around this level and closed the candle here, then this bull flag would be invalidated, all right? So now you have the bull flag and you got the target and it played out perfectly, all right? So now we're on a BTC 2-hour chart. This is August, quite recent. I'm going to show you how you could have used what you learned just now to calculate your targets on your shorts, all right? You can clearly see this was a bear flag here, okay? All right, clear bear flag, right? You're in this bear flag, so now you're thinking, where's the target? So you grab your pole and you extend it over here, and look at that. Perfectly hit the target, all right? So then you are on another bear flag. So now you're on a bear flag here, okay? You're on a bear flag there. Let's adjust this. There you have it, a bear flag. So then once it broke down the bear flag, all you got to do is you take your pole and see where your target is. It did overshoot by a tiny amount, so you missed out on 3% profits, but you did lock in 8%. So that was bear flag. So now we're going to take a look at head and shoulders and inverted head and shoulders. Alright, so head and shoulders is a reversal pattern, and like all reversal patterns, they're slightly more complex. So I'm going to come here and I'm going to draw a sample head and shoulders for you to see exactly how it works. So a head and shoulders will have, like the name says, both head and shoulders. So this is a head and shoulders, all right? It doesn't have to be exactly like this. It could change a little. It just has to hold some parameters, which I'll go over. This over here is the head. And these two are the shoulders. And this over here, from the top of the head until here, this is called the neckline. So once you examine this pattern, the head and shoulders, how you calculate the target is, say this is the price action, right? Once it breaks the neckline, which is this line over here, let me make it another color. So now, once it breaks the neckline, where will the target be? The target is the exact distance from the head of the head and shoulders until the neckline. So you take this length and there's your target. So if it breaks in here on this specific pattern, then your target would be right around here. So now that's clear, let's go over to a Bitcoin's 4-hour chart and see where we could have applied this. Alright, so now we're in the 4-hour Bitcoin chart, and what I'm about to show you is sure to amaze you. This will give you even more reason why you should have entered this trade here and why so many people did. So here we go. Luckily for us, TradingView has in place a feature to draw a head and shoulders, which is seen right here, number 6 here. And when you click on it, you can find head and shoulders right here. Once you click on it, you can draw your head and shoulders yourself. The head and shoulders was clearly seen here as the left shoulder, here as the head, here as the right shoulder, and there you have it, complete. All right, so now we're going to take a line, a random line. Let's make this red so you can contrast it. You take it from the top of the head, you bring it down to the neckline, and now you already know you drag it to here. There you have it, perfectly. It worked out perfectly. So a lot of people were looking at this level to enter because it was the major Head and Shoulders target, and this was seen at a long time frame, which make it held even more meaning. So you might be thinking, hey, it broke down right here. Why couldn't you have entered that trade there? Well, this is still in the head department. It hasn't even made the right shoulder complete. All right. So then you could have asked, why did we not enter right here? Because the Head and Shoulders was only complete once this breached here and breached back to the upside, because then is when you would have had the right shoulder. Okay. So then the only time that you could have entered the trade to short would have been right here. All right. At 13,000. And you could have closed your short here. Very understandable. Lock in some profits. Or you could have ride it all the way to the end of the target, which was right here at 6,365 roughly. And it hit 6,000. All right. This pattern played out perfectly. And let me tell you, Head and Shoulders and inverted Head and Shoulders plays out very nicely on Bitcoin. So now we're going to go over inverted Head and Shoulders, which, as you may have guessed it already, it's exactly like this, only the other way around. So it's upside down Head and Shoulders. Let's get rid of this first. So we're again at a 4-hour chart, and this is the 6K bottom for February 6th. And let's take a look at inverted Head and Shoulders. So you grab your regular Head and Shoulders tool, and you can clearly see that this right here is the left shoulder. This right here is the head. And this right here is the right shoulder. So now you take your tool here, you draw it from the neckline up to the head, and then you place it right here. And look at that. Where did it hit? Almost mathematically correct, okay? Literally on the dot. So you could have entered the big Head and Shoulders here, targeted 6,000, and you would have entered on the breakout. So where would you have entered this trade? Because obviously you only know that this happened here. That's the point where you know you're in an inverted Head and Shoulders. But now you're coming down, there's no confirmation. So when do you buy? You buy at confirmation, guys. And confirmation was seen right here. And that's why this green candle, as you can see, is bigger than all the others here, right? That's the astute traders. They're eyeing this pattern right here to break out. So once it did, they entered the trade right here, targeting the target. And here, if you had done so, that's 30% in the matter of a week, right? All right, so there are dozens and dozens of chart patterns. I'm not going to go over all of them because not all of them are related to this market. So the ones that I just went over, which is the bull flag, bear flag, inverted Head and Shoulders, and Head and Shoulders, are the most prominent chart patterns seen in this market. I've been trading this market for many, many years, and these are the ones that work the best. However, I will still be showing you a couple others right now, but not on the chart. So I'm going to show you a very commonly spoken about one, which is called a cup and handle. The chart would have to move somewhat like this. So this would be the cup, and then here you have the handle. So assuming that you only have information up until here, where I'm at, and you don't know the future, obviously, so you can't tell what's going to happen here, right? So you're here, and you see it trying to break this level, and you see that retraced, right? So it did retrace, and you're starting to gather information, so you got information all the way here, right? At this level, you can already be drawing this line here, because cup and handle is still very much in play, right? All you have is information outside of this green box. So now, let's take this green box away. So then price does something like this, right? So now, this is the time that you would buy. You would buy right here at confirmation. So now you're thinking, okay, so every other pattern there was a target. Where's the target with this one? Very simple. So you grab your line, you draw a line from here to here, and then you drag this line over here. So then, this is your target, right here, all right? And the exact same is valid for an inverted cup and handle. It would just be this. You would short at breakout, and you would target right there, and you would short right here, all right? So the last thing that I want to show you before I wrap up this video is pennants. It's also very seen in this market, and they're quite like flags, all right? Almost exactly the same. They just charted differently. So a flag is this, right? We just went over that. This is a flag. right? It would have the pole and it would have the flag. A pennant is this. Okay, that's a pennant. This is a flag. So then, on the pennant, you derive the target exactly like you would on the flag. There you have it. All right? So before I wrap up this video, I want to say that each video I'm giving you more and more tools for your tool arsenal. All right? I'm giving you reasons to enter or exit a trade. Candles, patterns, indicators, structure. These are all reasons to enter a trade. The more reasons you have, the higher the chance of it being a successful trade. You must strive to find confluence, all right? So I hope you enjoyed this video. I will see you in the next one.